Well, following today's market action, which of course follows last week's jobs report, capping a decade of robust wage growth and solid job creation. But a closer look shows some pockets of weakness in the labor market, which could mean slower economic growth ahead. Our Steve Liesman has that for us. He's back at our headquarters. Good morning, Steve.
David, good morning. The tight labor market continues to offer a mystery to economists. Why aren't wages rising faster? And why is the work week actually falling? You'd expect with a low 3.5% unemployment rate, workers could bargain for higher wages. And you'd think employers would give their existing workforce more hours. Neither's happening. The work week has actually declined by 0.3 hours as the unemployment rate has declined from 4.9 to 3.5%. After increasing for nearly 4 years, wage gains have declined for most of 2019. You can see that fall off there at the end. J.P. Morgan writes the generally soft pace of wage growth in this expansion isn't too much of a puzzle, given extremely weak labor productivity growth. But the deceleration of wage growth over the course of 2019 is more mysterious. Morgan Stanley says even with a 3.5% unemployment rate, the labor market is not so tight that it's creating sharp wage or price pressures. There are three reasons economists are talking about. These are not all of the reasons, but here are three of them. The first is substitution. You have a lot of young workers replacing older workers who make higher wages. You have changes in the mix all the time. In this case, you may have low-wage retail and leisure jobs replacing higher-wage manufacturing jobs lost because of trade. Finally, this idea of monopsony, that the employers are the only ones in town in a lot of rural areas, so workers actually do not have bargaining power. Modest wage growth with low unemployment gives the Fed room to keep rates low, but it also suggests modest overall economic growth that would be underpinned by what we're seeing now, which is modest consumer spending. Seema?